Hey everyone, in this video we're going to do an equity research report on HDFC Bank using Google's latest model Gemini 1.5 Pro. Now, ever since Gemini 1.5 Pro was released in mid-February, there's been a lot of hype around the fact that its context length is around 1 million tokens, which is fairly long. And if you don't know what that means, we'll talk a bit about it later. But basically, if you know about ChatGPT, it has roughly the latest model has a context length of 128,000 tokens. So you can think that sort of like Gemini's 1.5 Pro model is 10 times better than that. And that unlocks a lot of interesting use cases. So if you use ChatGPT and found that it somehow does not perform well when you upload large documents, a lot of those things are now going to be made possible with larger context windows. An interesting use case that comes to my mind is performing or doing equity research reports. Typically, a lot of companies, when they file their annual reports, they're anywhere between 300 to 400 pages long, at least here in India. So what I'm going to do in this video is I'm going to show you how HDFC Bank's financial year 2023 report, I'm going to upload it to Gemini, which is Google's AI model, and I'm just going to ask basic questions and try to extract structured output from it. So you can see here, I've got an Excel template prepared of the P&L, balance sheet, cash flow, earnings, ratios, uh, the NPA, the operational metrics, and so on and so forth. So uh, a typical equity research analyst, from my understanding, takes anywhere between a few weeks to even sometimes a couple of months to prepare something as comprehensive as this. I think what AI unlocks is the ability to sort of reduce the time which is like collating a lot of different annual reports, manually copy pasting it into structured Excel sheets. I think a lot of those tasks can be automated using AI, and that's what I'm going to show you today. So without further delay, let's get started. So I'm going to head over right now to aistudio.google.com, which is where you can try out their latest model. And as you see here, you have the option to upload images, videos, but we're going to stick with file documents today. So I'm going to head over to my drive, which is where I have the HDFC Bank report stored. Um, and I'm going to walk you through how we can prompt the AI model to return structured uh, documents from like fairly unstructured data. So I have the 2023 annual report over here, as you can see, and it sort of does a very good job of extracting this. And you can see that there's this figure here, which is 1,048,576. What this means is that this is the amount of tokens which you can fit in the context window of Gemini 1.5 Pro. More on like what that exactly means later. But yeah, and we have the file uploaded. It's roughly around 417,000 tokens, which means somewhere between 450 to 470 pages roughly. So I'm going to go straight into it. I'm going to try and get the balance sheet extracted from this. So I'm going to give it a prompt and say that extract the consolidated balance sheet of HDFC Bank as a structured table. So typically, annual reports have columns for the current year and the previous year. So we're going to try and get it to extract it for both of those years. And we're just going to just make sure that, include all relevant line items and notes as necessary. So you can see it's a pretty basic prompt. I think the emphasis here is on the structured table because again, we don't want it to be something that cannot be easily pasted back into our main Excel sheet, which is where we're sort of going to analyze those numbers. So let's see what it says. So you can see here that they have this nice little counter going on, which sort of measures the amount of time it takes. In my experience, it takes anywhere between 50 to 60 seconds for such a prompt. But we can like in a few seconds, we can start seeing the response getting streamed in real time. And what I'm going to do simultaneously is that I have the actual annual report open up as well over here. So I have the consolidated balance sheet as of March 31, 2023. So as the numbers start coming in, we're going to start comparing it and see if there's any hallucinations or uh, sort of data, if it matches or not. So it's already taken like 53 seconds, but it started streaming the answer, which is pretty good. Um, yeah, so you can see if you can see roughly the assets is around, or liabilities are around 2530432, which is, yeah, which is pretty much the number over here. So at least it's getting those headline figures right, but we'll wait for it to sort of give the entire output before we do a deeper comparison. Yeah, I think it's done now. So let's sort of take this back into our Excel sheet. So I'm just going to take this, copy paste it into my Excel. I think they don't, I don't believe they have the feature yet, but it'll be really great to sort of directly get it in an Excel format. But for now, I think we'll have to do with manually copy pasting it. Yep, here you go. Right. So I have my figures here for the balance sheet. As we can see, this number is pretty much correct. So the consolidated liabilities and assets for HDFC Bank are 25 lakh 30,432 crores, which is the unit that we have considered here, and which is also there in the consolidated balance sheet. Let's probably take one. Let's compare investments. So investments is 5 lakh 11,581. So that's the amount of investments that HDFC Bank has made off its balance sheet. And let's just cross check once with the annual report. And yeah, pretty much, if you sort of zoom in here, um, investments are 51158.71. So I think, yeah, that is correct. Um, if we look at, say, borrowings, 2,56,548. So this is the amount, 2,56,548 crores in Indian rupees. So this is the amount that HDFC Bank has borrowed during the financial year 2023. And just cross-checking here again, 2,56,548, which is also correct. So it's done a pretty good job of extracting numbers in a structured table fairly quickly. A typical equity research analyst would have sort of like copy pasted it in some way. There are tools which let you do this as well, but a lot of times those are not very accurate, and sometimes um, they don't share all the line items. So, for example, I can show you the profit and loss, which I had copy pasted a bit earlier. Uh, Typically, a balance sheet does not have as many line items as a profit and loss. But if, as you see over here, the profit and loss statement is quite comprehensive. So you have a lot of sub line items within the main headers. So you have expenditure, but then within expenditure, you have a lot of like miscellaneous stuff like rents, printing, advertisement, um, auditors, fees, whatever, right? Uh, and a lot of these existing tools do not give you this level of granularity. A lot of times, equity research analysts have to manually sort of like go into the annual reports and fetch these numbers directly, paste them back into Excel, which can take a lot of time. And as we see, the model does that for us in a structured table, which is pretty good. I have already verified these numbers. I'm going to leave links for you to have a look at it as well. But yeah, I think this is pretty good. It also gives you a nice summary of like notes, which sort of give basic pointers on the P&L might have just like picked it up from the annual report. I think this is pretty good. We can do it again, say for the cash flow statement, which also has quite a few line items. Uh, so I'm going to head over here. I'm going to give it one more prompt. I'm going to say, I think an important thing with these models is you have to be really specific in terms of what you want. Otherwise, they have a tendency to sort of be lazy, quote unquote, and not give you all the necessary details you want. So if you see in my prompt, I've just made sure that specifying that I really want it in a structured table. I want all relevant line items and even sub-line items to be included. And yeah, let's see how it does with this one. Yeah, it's already started streaming the answer in like 15 seconds, which is pretty good actually. And if you see, one of the things is that I did not specify FY 2022 year, so it's only giving me figures for one column, which is like, again, it goes to my point that you have to be really specific with these models, otherwise they will only share sort of the basic stuff or what has been asked. So you really have to sort of specify it in the prompt. I think this is something which can be improved upon, but yeah, I'm just going to update and ask it to include FY 2022. Yeah, so I've just asked you to include those FY 2022 figures in the table again, and then share the updated cash flow statement. As you see, it's quite comprehensive. It's included a lot of the subline items, which are a typical tool if you sort of go on Yahoo Finance or a lot of these other equity research online databases. They do a pretty good job of summarizing, but often they miss out on the minor details, which are actually quite important, especially if you're doing sort of a comprehensive equity research analysis. So yeah, it's now giving you two columns now that you've specified it. So we're going to pick this up and do a quick comparison once this is ready to be copied. If you see the notes over here, I think what's interesting is that it's sort of asking you to refer to schedules as well. So a lot of times, like if you're reading like 400-page annual reports, it's really tough to sort of keep scrolling and come to the right section where what you're looking for is mentioned. What I've found with these models is that they can cite sources very well. So if you have a question on a specific line item, it can sort of lead you to what page or schedule it belongs to, which is also quite nice instead of randomly just scrolling large documents. So we're going to take this cash flow statement now and take this back to our Excel sheet. Yep. Yeah. So as you can see, it's quite comprehensive. It's included quite a lot of the uh, adjustments which are typically seen in a cash flow statement. So let's just pick one number here. Let's start with net cash flows from operating activities, which is basically how much cash did the business generate from its core operations. In the case of HDFC, which is uh, probably lending money to its customers and generating fees from different financial products that it offers. So we can see here that it's generated 20,813 crores in FY 2023. Let's just cross check it quickly over here. Hmm. Yep, there you go. So net cash flows from operating activities 20,813.7, and then quickly for this FY 2022, it's actually a negative number, as you can see from the bracket, which is 11,959. So let's see if that matches with what we have here. Yep, there you go. So you have 11,959, but as a negative number. So in financial year 2022, HDFC Bank in fact used money in its operating activities and did not sort of generate cash flow. We can probably ask questions around that also. I think that's what is pretty amazing. If you're analyzing a bank for the first time and you sort of don't know why something is, like maybe something happened in that particular financial year, let's try and ask it and see what it says. So why was the figure of typically to answer such a question, especially if you don't know anything about that particular company, you probably have to read through a bunch of the text in the 400-page annual report, or maybe do a Google search and sort of rely on third-party knowledge. Uh, I found questions like this to be pretty useful in the. Oh wow, okay. So it says that it cannot definitely pinpoint the exact cause, but yeah, it's just giving potential contributing factors. So let's see. So it's saying stuff around increase in advances and changes in working capital. But yeah. So the additional considerations are there was a big merger with HDFC, which was a sister concern, and they sort of merged together. So probably that could be one reason. And if you can see here, there's a disclaimer that it's an AI chatbot and it cannot provide financial advice. So yeah, I think for qualitative questions, there's still a bit of work to be done. There's not like 100% confidence in what was the exact reason, but it does give you sort of like hypothetical reasons where there's been a changes in working capital and provision for NPAs and other expenses which could have contributed to a negative cash flow. So we'll come back to this later. Um, but yeah, let's probably see a few other numbers and see if something stands out. Um, so the net cash flow used in investing activities, which is another important metric, is negative 3,423 crores, which means that HDFC Bank sort of put in this much in cash in investing activity, which is probably purchasing fixed assets, and that is pretty much it primarily. So let's just cross check it over here. Yeah, net cash flow from investing activities negative 3,423.89, which is what we have over here. And for FY 2022, it's negative 2,216. So it's slightly increased uh, over a period of 1 year. Um, Going back to financing activities, which is the third component in the cash flow statement, for FY 2023, it's 23,940.56, which has come down significantly from FY 2022, where it was 48,124. Let's just cross check. Yeah, that is pretty much correct over here. So there's clearly something going on between 2022 and 2023. Obviously, we know now that there was a merger which was announced with its sister concern around that time period, which is probably contributing to this difference. But yeah, it did a pretty good job of at least extracting these numbers, including a lot of these adjustments, which are typically hidden in notes and schedules in these annual reports and not readily available. So I think that's pretty good. What I'm going to do is I'm going to head over now and get it to share a bit more complicated questions like ratios. A lot of ratios like relevant for the banking industry are sometimes given directly in the annual report, and sometimes you have to calculate them. So which can become a bit time consuming. So let's try and get the AI to do that for us. So I'm just going to type in a prompt and say, and when deciding the kind of ratios that I want included, what I'm going to do is I'm going to take another Excel sheet. I'm going to pick another bank that I recently did a similar activity on. And I'm going to take the ratios that are relevant for the banking industry. Of course, because of industry changes, like the ratios typically differ. So I did a similar exercise for ICICI Bank, which is another large bank in India, and these are the common ratios which any analyst studying a particular bank looks at. So let's just paste it in here and see how it calculates these ratios. So I think the form factor of copy pasting, it's not quite optimal, but yeah, I think I imagine this to become better over time. So you have your typical ratios like return on equity, return on average assets, net interest margin, which are very specific ratios for uh, the banking industry. You have gross NPA, which is your non-performing assets, which is a very key metric that is tracked uh, in banking. You have some capital adequacy ratios. So this really depends on the industry that you're looking at, but it's always good to sort of give as much context to the AI rather than letting it decide for itself what it wants to output. I'm just going to structure this nicely so that there's no problem later on. So you even have ratios like net profit per employee and business per employee, which is sometimes given uh, directly in the annual report. So it's kind of uh, it's like finding a needle in a haystack because it's usually given in a very small section somewhere, and in a large 400-page document, it kind of sometimes becomes tough to fetch that information directly. So I'm just going to give this a shot and see how it does on this particular metric, and then we're going to compare it with the actual figures in the annual report. Okay, this took around like 20 seconds to start streaming, and it's already calculating a lot of these ratios fairly quickly, I would say. Yeah, and it's also giving like I think this is pretty cool. Like it's analyzing what the ratios indicate and not just sort of giving you the structure table. I did not even have to prompt it to analyze anything as far as I remember. Yeah, I mean, yeah, it's just doing that on its own, which is kind of surprising, but yeah, sort of giving its own thoughts on what those ratios indicate. Yeah, I just asked you to give it a list, and it's coming up with analysis, which is pretty useful. I'm going to take all of this and put it in my Excel. Okay, so let's probably have a look at the profitability ratios. For FY 2023, it says 17.4%, and then for FY 22, it's 16.9%, so slight improvement in profitability. Uh, let's try and cross-check this in our actual report. So I can just do a search over here. Yeah. So there is no profitability ratio directly given, at least not that it comes up over here. So I'm going to ask the model to sort of explain how did it arrive at that figure, to see how did it reason through. Because sometimes with a lot of these ratios, you sort of have to take figures from different sections in the report and sort of calculate and give your answers. Obviously, the model did that automatically, so user did not have to do that manually. But it's always good to know in terms of having confidence that how did you arrive at a particular figure. So let's see what this says. So it's explaining stuff around return on equity and return on assets. Yeah, and again, it's sort of like giving you a disclaimer that it cannot provide financial advice, which is, yeah, fair enough. Okay, so let's see what's going on here. I think the structure is not, yeah, I think, so it's giving a figure of 17.4% and 16.9, but I'm not sure for what exactly because, okay, let's try and see what it's picked up. I can't find something with 17.4, so I'm not quite sure what that number is for. I think an issue right now is that the structure of my prompt was not probably very good. So yeah, again goes to show that sort of have to structure your prompts very well. But let's see what it says in terms of where that number is coming from, because I'm not too sure. So it says that return on equity. Let's cross check it. Oh yeah, here you go. So you have all your ratios over here, but return on equity for 2023 is 17.39% and 16.9%. So it did get the figures correctly. It's just that it failed to structure it very well. So if you go here, yeah, so it did say that it's 17.4 and 16.9%. It's just that it probably didn't structure the output very well. So it sort of seems that the return on equity is 2.07% instead of 17%, uh, which is the actual number. Uh, so yeah, I think that is one drawback. It did get the answer correctly, but it sort of failed to structure it very well. Uh, Yeah, and I'm assuming that the return on average assets is 2.07 and 2.03. You can get that cross-checked as well. Yep, there you go. So return on assets on average is 2.07 for 23 and 2.03 for 22, which is what we have here. But again, it sort of messed up. I'm sorry. Yeah, it messed up the alignment of the table. Just kind of like not very good. But yeah, it did get those numbers correctly. But just goes to show that structure is something which is very important, and you have to sort of structure your question very correctly. Of course, I made a few changes in my prompt, so that's probably why it messed up. But yeah, it's given a lot of these ratios, so it is doing a good job at sort of like fetching numbers hidden in like just a small table, and then it's also giving you an analysis of uh, like profitability, efficiency, asset quality, stuff like that, which would probably like as an analyst, you still want to probably do a deep dive, especially. But I think for a first glance, it's pretty useful to see what's going on, especially if you're looking at a company for the first time. So let's move on. I have this section called earnings. I think earnings are quite important. If you ask any analyst, I think they'll say that they sort of swear by what the management is actually saying on the earnings call, rather than sort of pretty much that is the highest signal, is my point, that what a management says during its earnings call, how they react. I think there's a lot of stuff around sentiment analysis, but I think the problem is that it's very tough to sort of attend all earnings calls as they're happening and then make notes. So a lot of analysts, what they do is that they sort of rely on transcripts. And transcripts are readily available, but even those tend to be fairly long. So what I'm going to do is I'm going to feed in a bunch of these earnings call transcripts that I have here with me, and I'm going to see how the model responds to that. So I have uh, quarter four, three, two, and one. Yep. Okay, so it's taken one of these incorrectly, so I'm gonna have to go back. So I have Q1, Q3, Q4, but I need Q2 for 23. So we're gonna probably have to go back here and fetch that. But yeah, I guess the point is that uh, analyzing even earnings transcripts, because sometimes becomes quite a tedious task. So it's pretty interesting to see how an AI would cope with that. Okay, let's see if this is the one. No. Uh, okay, I'm gonna go ahead and just do it. Okay, I can't seem to find the Q2 FY23 transcript. So I'm going to see in, yeah, just do it for these four. And I'm going to ask a question and ask it to summarize these earnings transcripts. And I'm going to try something and I'm going to tell it to ignore the Q224 one. Let's see if it catches that. And what I've basically said is that I want a summary, but I don't just want like a plain vanilla summary. I want it specifically against certain parameters, and I'm going to tell it a bunch of like things that I want covered in these earnings transcripts. So I'm gonna again go back to my reference sheet, and there's a bunch of stuff like margins, loan portfolio, unsecured loans, stuff like that that I specifically wanted to give me a summary on, and I'm just gonna sort of start typing it over here. So these are all the things that any analyst would typically look at when they're analyzing a bank. What are its margins? What are its deposits? Who does it give money to, or who does it lend money to, which is its loan portfolio? How does it do on credit and debit cards? What kind of technology stack is it using? Um, what else? Okay, slippages, costs. Yeah, I think this is good for now. Let's see what it says. So if you're an analyst who was previously doing this sort of either by attending the earnings call live and then making notes, I think you would sort of like know the pain of then going back and collating all of this information. So I think if you have an AI model like this, which can do this for you, and especially based on specifically the things that you want out of it, I think that can be pretty useful. So let's see what it has to say. So again, it's taken like 30 odd seconds to roughly start streaming this answer, which is pretty amazing actually. Um, and I think these performances will only improve going forward. I think so. The model is like was literally released last month, so it's fairly early days. So yeah, it's quite exciting to see where this eventually goes. I find it pretty useful even now. Of course, there's like some issues as we've clearly seen with structure of the output, but yeah, I think directionally this is pretty interesting, at least in terms of the efficiency that it can drive. Yeah, I think let's just start reading what it's streaming. So it's giving like 3 4 bullet points on each, which is pretty useful. We can sort of get it to deep dive into specific ones if we want. Yeah, and again, there's like a clear disclaimer. I think this is new in my experience yet. This was not coming up, but I think this is a new update that they're giving a disclaimer that uh, you should not take financial advice, which is yeah, cool. So let's start reading a bunch of this. So as for margins, it says there's pressure due to the merger, which we have discussed. Like there was a merger with the sister brand, which is sort of like possibly it says that they estimate a 25 basis points impact in the margins, which is interesting. So if we go to the uh, earlier sheet on ratios, if you see the net interest margin, it has in fact come down. Okay, not yet. So yeah, so the effect on the margins is not yet uh, evident, at least from the numbers, but the management is saying that they do estimate. From my knowledge, it has played out. So if we do it for FY24, I think the net interest margin has come down. So I think this has played out because of the merger. But yeah, I think it sort of like foresaw that and summarized it pretty well. Um, and it's giving like a bunch of uh, analysis around different things that we want. Um, Not a lot of numbers here from what I can see. Maybe we can get it to, yeah, so in terms of credit and debit cards, it's investing in technology, which is its digital platform of My Cards and Pays app, which is HDFC's payment app. Um, but yeah, I think there's like a lot of qualitative stuff in there. So why don't we tell it to sort of give us facts and figures? So give me some. And I'm going to make sure that it only picks those related to FY 2023 and ignores the one that we mistakenly attached there. Until that is ready, let's just take this back to our Excel sheet. So we can see that it's it's included quite a lot of facts and figures actually from these. Yeah, I think this is pretty interesting. So this is quite data heavy. Yeah, I wish there was a way to maybe ask it to not give you disclaimers every time. But yeah, it's just like growth and expansion. It added 1,479 branches during the year, payment acceptance, wealth management. Yeah, this is pretty good. Deposits, net revenues. Yeah, I think if you're an equity research analyst, I would love to know how much this would have taken you in terms of time and effort. My understanding is that you probably have to read the entire earnings transcript, make a lot of notes, maybe cross-verify it with the investor presentations and the annual reports. But yeah, I think this is it's pretty useful. I'm going to share all of this in the link, so please go through it. And if there's any discrepancy, uh, let me know. But yeah, this is pretty useful. We're going to dump all of this here in our earnings tab. So yeah, I think it's done a pretty good job of just summarizing based on like a bunch of different factors. Obviously, we don't have time on this video to sort of cross-check each and every one, but I'm going to leave the link to this sheet and make it public for anyone who's interested to have a look and share your thoughts with me. If you have any observations on how the structure could be made better, what additionally you would want out of this. You can try it out yourself or just tell me. I can make another video on this. But uh, initial thoughts, I think it's pretty good. There are obvious drawbacks in terms of the structure in which it returns information. I think there's quite a lot of like prompt engineering, as they call it, required to sort of get it to output stuff in the way that you want it. But I think there's a lot of efficiency gains which can be driven with something like this. So we also have additional tabs around NPAs and credit debit cards, shareholding pattern of the company and stuff like that, which typically goes into any equity research report that you find. So I'm gonna fill all of this using the AI model and share this for anyone to have a look. But happy to hear your thoughts, uh, feedback, if any. And yeah, I think this is the end of the video. I think it's super interesting what Gemini 1.5 Pro enables. I've tried a lot of this stuff with GPT-4, which is OpenAI's state-of-the-art model. My initial observation is that it's not very good at returning accurate structured data, especially in the form of such tables. But if you've found any other models like Claude, which I have personally not tried, and you've found it useful with these tasks, do let me know in the comments. But yeah, I think this is pretty useful, and I'm going to keep experimenting with this and share my observations here. So thank you for watching, and if you're an equity research analyst, do let me know what you think of this. If you have any thoughts on what else could be done in terms of the questions that could typically be asked, or if you have any general thoughts on how this could be useful in your workflow, I would love to chat. And yeah, thank you for watching.